if you just widen out your horizon a little bit and look at what's been going on across the other asset classes, then gold is actually doing perfectly well. Even last year, where in dollar terms it was slightly down, in euro terms it was slightly up, but it was a year where we had a fantastic year across the stock markets. Bond markets were reasonably well behaved. So asset managers from that perspective did not really need gold last year, and that was actually the reason why, even though inflation started to pick up, that gold was asset managers were selling gold last year because they didn't need the insurance, because the other markets were well behaved. So far this year, that has been turned upside down, and that's the reason why right now, even though real yields have moved from negative 1% to flat to zero, which normally during the past few years has been a very negative. Would have been a very negative driver for gold. We haven't seen gold respond negatively because the focus has simply shifted elsewhere. It's focusing on the inflation worries, it's focusing on growth worries, it's focusing on the increased volatility that we're seeing not only in the stock markets but especially in the bond market. And obviously also the geopolitical worries related to the war in Ukraine. And looking further ahead, I think there is a risk that central banks will do a policy mistake, basically tightening too much in terms of what the economy can cope with. We are seeing forward indicators that growth also in the US is starting to slow down. When you have mortgage rates in the US suddenly hitting these kind of levels, then also the housing sector will start to be impacted by it sooner or later. So with all this adding up, I still see most certainly see the need for gold, or probably even more so silver, I would say, because it tends to be the more volatile younger brother, kid sister or kid brother to gold. So I like them both from a portfolio perspective. I have, for clarification, I hold it myself, both gold and silver. Not a high percentage, less than 20%. But it when I see the daily swings in my portfolio, I really like the reduction it does to my overall volatility, and I think that's also why, even though we've had a correction since March when we surged higher, throughout this whole period, asset managers have continued to buy into gold. We can see holdings in ETFs continues to move higher, and that is a sign that they are not really responding to the daily volatility in the market, but the general worries that lies ahead, and that's why they continue to buy into it. So I think we will see a new high in gold later this year, and with that, some additional momentum that could take it higher.